Well, good morning, Jagendra Rana here. So today I'll discuss how to ensure stock in open. How to ensure stock in open. So why is it important to buy stock insurance? Because warehouse owners, inventory managers, and shop owners must recognize the significance of purchasing stock insurance. This insurance coverage is paramount as it offers financial protection, guarantees uninterrupted business operations, mitigates risk, safeguards against theft and natural disasters, ensures compliance with the regulations, peace of mind to the insured. So, stock insurance is a smart investment that protects your assets, that helps you face unexpected challenges with strength. So, stock insurance provides coverage for the fire and allied perils. This coverage protects against losses caused by fire, lightning, explosion, implosion, right strike, and malicious damage, aircraft damage, storm, cyclone, tempest, flood, inundation, earthquake, and other related perils. Then burglary and theft. This coverage protects against losses due to theft, burglary, or housebreaking, including forcible entry or exit from the insured premises. Accidental damages. It covers losses resulting from accidental damages to the insured stock, such as damage during handling, transportation, loading, unloading, and similar incidents. Then natural disasters. This coverage includes losses caused by natural calamities like earthquakes, floods, storms, hurricanes, cyclone, or any other specified natural disasters. Malicious damages. It provides coverage against losses due to intentional damage or vandalism by third parties. Then spillage and leakage. This coverage protects against losses caused by spillage or leakage of goods such as liquids or chemicals leading to damages or contamination of the stock. So, stock insurance policy does not provide coverage for the willful misconduct, war or war-like operations, pollutions or contamination, consequential losses, costs, fees, and expenses for preparing any claim. So, there are several factors that can affect the stock insurance cost, like value of a stock. The total value of the insured stock impacts the stock insurance cost. Then, types of stock. Perishable or high risk items may result in higher premiums. Stock storage condition. Proper storage facilities can lower stock insurance charges. Risk assessment. Industry risk and location influence the insurance charges. Then claim history. Frequency and magnitude of past claim affect the stock insurance premium. Deductibles. Higher deductibles can lead to lower stock insurance premiums. Then coverage limits. Higher coverage limits result in higher premiums. Additional coverage options. Optional add-ons may increase the premium. Then business size and history. Established and larger businesses may have lower cost. So each insurance provider may have their own factors and calculations for determining stock insurance costs. Considering with insurance professionals is recommended, or consulting with insurance professionals is recommended for accurate quotes and understanding specific premiums. So some stock insurance policies may have specific requirements for storage conditions such as adequate security measures or temperature controlled environments. So review the policy terms to ensure compliance. Then market value coverage refers to the current value of the stock in the marketplace, while cost price coverage is based on the original purchase cost of the stock. The policy terms will specify which valuation methods applies. To find the right stock insurance provider, consider factors such as their reputation, experience in the industry, coverage options, customer reviews, and pricing. You can compare different providers, consult with insurance professionals, or use online platforms to make an informed decision. Small businesses should consider purchasing warehouse stock insurance. It provides financial protection against losses or damages to inventory or stock, ensures business continuity, and mitigates risk. Stock insurance is an important investment for small businesses to safeguard their assets and maintain stability. You can find suitable stock insurance online. Many insurance providers offer online platforms where you can compare different policies, coverage options, and premiums. So using these platforms, you can easily assess and select a stock insurance policy that meets your specific needs and budgets. Online platforms provide convenience and access to a wide range of insurance options, making it easier to find a suitable policy for your business. Now, there are certain options available, but basically fire insurance is a type of property insurance that individuals or corporates or corporate entities can opt for to cover losses or damages caused to stocks. This can be taken along with the office building, furniture, fixtures, plant and machineries. So in short, it is essentially a contract between the insured and the insurance provider where the insurance provider agrees to cover the financial losses that the insured suffers due to fire and allied perils. Such fire insurance policies are unique. There are some key points to note when filing a claim. First, the loss caused by fire or by allied perils must satisfy the required conditions. So when operating a business of any kind, getting some form of property insurance is crucial to protect against financial losses. It is because unforeseen events like fire and natural disasters can cause excessive and in some cases a total loss of goods. So without insurance, you will need to bear these expenses out of pocket. Moreover, repair and reconstruction costs are not cheap. So it is better to get the insurance to protect against such damages at an earlier date. So a fire policy covers the repair and replacement cost of goods and stock or movable property, or rather movable property in case of stock. So stock here can include finished goods, semi-finished goods, stock in process, stock invoiced and ready for dispatch, raw materials and packaging materials, stocks held in trust for which the insured is responsible, stocks in open in the insured premises. So businesses operating in certain regions are often more prone to fire and natural disasters. A fire insurance policy is the best way to ensure these stocks and financially secure them. Moreover, fire insurance policies provide coverage for theft caused by fire and other perils. So these plans also covers the other perils like material damage, lands, subsidence, landslides, subsidence, impact damage, and all those 14 perils which are covered under the Bharat Sukshma Udyam Suraksha and Bharat Laghu Udyam Suraksha policies, and in 12 perils of standard fire and special peril policies. So you can pick either one according to your desired coverage. There are companies which are providing other policies also, like Business Guard Sukshma Package policy. This fire insurance policy covers damages and losses for a sum insured that caps at rupees 5 crore. That is the same Sukshma Udyam Suraksha policy. It covers physical loss or damage or destruction of the insured property due to unforeseen events outside your control. It includes fire, natural disasters, impact damage, riot strike, and structural damages unknown to you. So, if the sum insured is more than 5 crore, there is Bharat Laghu Udyam Suraksha policy that also offers financial assistance in the event of damages caused to you by all the 14 perils listed in the policy. So the clauses for the plans stated in the above policies are almost similar, except few differences like sum insured limit, minimum premium, startup expenses, compulsory excess, etc. So under a fire policy, if a partial loss is there, the portion of the stock is damaged, then the policy will reimburse the actual loss suffered by the insured. If your stock is partially damaged, then insurance company will reimburse for the cost of repairs to the extent required to bring that stock to a condition which was before the loss, but not superior or better or more extensive than its condition if it was new on the date it was damaged. So in case of partial loss on the stock, insurance company will reimburse you to the extent of the loss incurred. But in case of total loss, as the same suggests, a total loss covers the full value of the insured stock. So the losses covered under this policy may be the Bharat Sukshma Udyam Suraksha policy or Laghu Udyam Suraksha policy. The full stock value will be indemnified minus salvage value or under insurance as per the provision, because the under insurance is waived to the extent of 15%. So for stocks, losses in stock, the landed cost at your premises for stock of raw materials, the total manufacturing cost for stock of finished goods, the input value of stock in process at the time of loss. In case of goods sold but not dispatched, the claim amount will be paid based on the contract price of goods if the sale is cancelled wholly or to the extent of loss or damage caused by an insured event. So additional coverage under the business Laghu Udyam Suraksha policy or Sukshma Udyam Suraksha policy, this can be modified in addition to built-in covers by opting the available add-on covers. because the policies are also covering certain add-on covers without any additional premium, which are available with the standard fire and special peril policy, because there the additional premium is charged for them. But in these two policies, most of the add-on covers have been merged by the Insurance Regulatory and Development Authority. So, as far as the loss of stock is concerned, insurance company is there to provide the losses, the financial value of the losses. Under both the circumstances, either the stock is stored in open or in godowns. So extensive list of inclusions is there, because the policy has the listed perils. In addition, there are certain inbuilt covers, which inbuilt covers are like 3% of the claim amount for architects, surveyor and consulting engineers, cost of removal of the debris, temporary removal of stock, and more. Easy claim process is there. And as far as the perils are concerned, if the loss or damage is caused to the stock by fire, bush fire, forest fire, jungle fire, explosion or implosion, lightning, landslide or rock slide, impact damage, missile testing operations, right strike and malicious damage, bursting and overflowing of water tanks, leakage from automatic sprinkler installations, earthquake and volcanic eruptions, storm, cyclone, typhoon, tempest, hurricanes, tornadoes, tsunami, flood and inundations, theft and terrorism. So these are the 14 perils, which also include the set of perils like RSMD, STFI, etc. But none of them can be excluded during the policy period. All 14 perils will continue from the day of issuance of the policy till the expiry date. Fire and other perils are sudden and unpredictable in most cases. They result in excessive loss or damages. Therefore, a fire insurance plan suits for the coverage of the stock. So either the Sukshma Uddam Suraksha or Laghu Uddam Suraksha, or if the stock value is more than 50 crore, in that case, standard fire and a special peril policy will come into the operation. As far as package policies are concerned, certain companies have developed their package policies, that is comprehensive policy or umbrella insurance policy. There also this section is included. Those policies can also be taken if the coverage for other risk is simultaneously required. So selecting sum insured is important for the policy, because fire can have devastating effects on your stock. So you can consider the value of the stock when deciding the sum insured on your fire insurance plan, because it will include the value of a stock in open, maybe in 3 different forms, like a raw material, stock in process, and finished goods. So for all, the different kind of values are required, because for raw material, landed cost, for stock in process, input cost, for finished goods, manufacturing cost should be the minimum sum insured under the policy. Thank you very much.